gold has been tanking. And Gary, I know also just from some of our previous conversations that you've been bearish on gold. I also know Frank is bearish on gold. What are you looking at? I think the last time we talked about this, Gary, you were saying, 1800s seem reasonable. And here we are, we've broken into the 1800s again. And, to my surprise, I thought gold would hold up a little bit better than this. So what are you looking at? And we'll let you share your screen and go for a minute here.
Sure. So the reason being, the reason why I identified that gold could drop down to around about 1809 is due to patterns in the market, and I'm a big pattern trader. So if we take a look over here on the chart, we see that price created this wave structure, wave 1, 2, 3, 4, and 5. So once we completed that fifth wave, the market tends to chase after the fourth wave low. It is a common thing. More often than not, we see the market doing exactly that. And so the low that we're chasing after is chasing after 1809. So 1809 is the downside target. Now, there are certain things that could play out that could change things around. Again, depending, of course, how the Feds approach the rate decision. We all know that what's going down right now is the inflation is starting to tick up a little higher again. We had a downside move, but now we're seeing it starting to move up a little higher. Feds kept the rates unchanged, but there's a possibility that the next meeting they'll start raising again if inflation rate starts moving back up again. We know that they're trying to hold off from raising rates because of the banking sector. They're creating pressure on the banking sector based on their purchase of treasury bonds at 3%. So there's a whole bunch of things going down right now that they could slow the process of the Feds raising rates. That could continue to see gold dropping back down south. But as soon as the Fed starts kicking in and starts doing things and the dollar starts falling, then this could drive the gold back up again. So I think that the most important thing is we've got to take a look at the dollar index and see what dollar index is doing. If I go to dollar index,
want to stay up to date with all the latest trading information? In the description below, you'll find the link to join our free Discord. The Discord gives you instant access to lots of helpful material like free trading courses, chart analysis, updates about what's happening in the A1 community, as well as discount codes for our other products and services. The best part, all of this and more is 100% free. So go down in the description below this video and check it out for yourself. If you're interested in upgrading to the full VIP Discord featuring our team of expert traders signals, you can use the live chat link in the description to get connected with one of our team members in seconds. So don't wait, go check out the free Discord today.
We are seeing dollar index breaking through this rising wedge here, which is a typical sign of a possible quick retracement if we get back into this trend line right here. So this trend line, if we see the dollar index turn around and go back inside here, we're going to be heading back down south again. So the signal yet for the dollar is still bullish, but we're still very short on dollar long term. It's just a matter of time when it's going to happen.
Sure. Yeah, no. And again, that dollar strength has a real bearish push on the gold world right now. I know, Gary, you mentioned several things there. The Fed staying so kind of tight has been a real driver on the gold world. For a little while, it seemed like it was kind of going the other way. It looked like the Fed was going to kind of start its easing process. And, in the last month or 2 months, we've kind of seen a lighting of that fire, which has really driven the price of gold down, but somewhat of a delayed response, actually. There was an initial push up on gold, came down later. Frank, I want to ask you, gold-wise, I know you're short. You're trailing a stop on it. Is that right?
Yes. So what I want to look at is tomorrow's GDP. So what this could do for gold and the indices, what I'm actually hoping for is a lower GDP, hopefully than expected. But if we were to take a look at the last 3 months, even if we've seen beats in the expectations, or in March it met, but overall what we're seeing is a decline in GDP overall. So throughout the year, output in the US has gone down. So hopefully what we're expecting this month or this quarter is 2.2%. Hopefully we'll see something lower than that, because I want to start looking at longer positions in the indices and potentially gold. Right now I'm still short gold. I'm trailing it. It hit the 1880s, where I thought it would go and test that low again. And so I guess right now I have my stop pretty tight, just to take the most out of the trade, just in case it rebounds. But for now, yeah, still got that short bias. And if GDP changes tomorrow, if it beats expectations and is higher than previous two, then I will probably be less bearish or less bullish. So just hoping for lower GDP overall, so I can look at longs on the indices. But here is gold. What I'm looking at here on the 1 day is price is now at 1884. A break lower than this is definitely going to be bearish. And then I guess my trade will continue, but up until then I'll just be trailing, and I'm looking at more shorts on the yen pairs. So I broke even on CAD yen. I'm still in euro yen short, and also short Kiwi Swiss. So just looking at all across the board, just mostly from COT and just risk off sentiment, what pairs look the best to trade overall. And so that's basically it for me.
Cool. Yeah. That chart looks so clean. Both of you guys have those bearish markups on gold. It's really interesting to see kind of some synergy there. Gary, so gold, again, you mentioned the big thing there is the dollar index driving higher. Until that cracks, gold doesn't look bullish. For people who maybe are bullish on gold or are interested in a buy, you kind of hinted at it, and I want to come back to you. If you want to show us our charts again, where does gold become bullish in your view, and kind of what signals would you be for perhaps people who are like, when is the turnaround? Where is the bullish idea coming in?
Yeah, so I wouldn't even pay attention right now on gold's pricing at all, rather than paying attention to what's happening on the dollar. You look at Dow, look at dollar, and look at those as signs of possible turnaround. If we start seeing the dollar starting to swing and turn, because we're looking for the next turn to be a long-term downside move. So if we see a turn in the dollar, then it will be time to start buying. Look, I'm going to be a long-term buyer in gold. And I'm talking about not buying spot. I'm talking about actually holding physical gold. And so finding the best time to physically be purchasing gold would be once we start seeing the dollar start to turn. So anytime that happens, I would say that from this area right here all the way down here, this is my buy zone right there. And so if I see a sign of dollar changing momentum and turning around, I'm going to start buying in small increments and keep buying to a point where I'm convinced that the dollar now is turned. And then I'm going to go ahead and look at the chart on gold and look for my targets to the upside.
Gary, I didn't know you were a stacker. I am also a stacker. And I will say this, one thing that I've been very interested in regards to gold and silver. And I think this is interesting. I mentioned this to Frank. We were having this conversation earlier this week. We were talking about the most bullish situation for gold. As much as price looks very bearish right now, one of the most bullish environments for gold that I can possibly think of is exactly what you're talking about. Dollar strength is here right now. But what if inflationary pressures continue to stick around for the long term, but the economy at some point begins to crunch a little bit? As Frank mentioned, looking at tomorrow's GDP numbers might be an early sign. If we start to see contraction in the US economy, yet inflationary pressures are persisting, that stagflation, where you have high and rising prices while also unemployment problems and economic problems, that right there is the most bullish environment for gold, because that is the environment of true fear in the markets. The idea that central banks might not be able to conquer inflation without completely crumbling the economy is totally gold's, that is its shining stage. So that is, you mentioned that, Gary. I like to hear that. We're kind of all on the same page with that. The most bullish environment is true dollar sell-off due to recessionary problems, and that is where you're going to start to see yields come crashing down, but not for the reasons that people are thinking. That's going to be the fear, the true fear environments. You see yields crashing, which brings the dollar down as people are now factoring in recession. So recession is one of the most bullish scenarios possible for gold, especially if inflation remains persistent. So interesting kind of topic there, talking about the possible gold bull turn.
Right. And I'm going to say this, that right now, based on everything that's going on in the US here, if we start seeing GDP starting to slow down and we start to see that decline, then that is a big problem with a higher dollar. Which means that because the biggest thing that feeds GDP here in the US is tourism, and if the dollar is very strong, that's not going to support anyone trying to travel here and bring in outside currency into this country, because the only way that the country can pay for its debt, which of course they're raking up pretty fast, is to have a high GDP, because GDP pays for the debt. And if they are not focusing in on the dollar and trying to sustain the dollar's rally and keep the dollar down, we're going to run into major problems here in the US. We're not going to be able to afford to pay our debt. GDP is going to keep coming down, and this is going to be a big problem for the US in the long term. So things are yet to shine. We're going to see it over the next 6 months, especially in the property market too.
Yeah, no, all good stuff, Gary. And again, I think this is the sort of wisdom that I think a lot of traders they don't get traversing, just standard YouTube. Yourself, Frank, me, and several of our guests, we really dive into the fundamentals, and we try and add that commentary on top of the charts. So, Gary, last thing I guess we could ask you. Give us an unrelated chart that you are also watching. Anything else, maybe on the currency world? Got pound yen pulled up. You have an idea here?
Yep. Yes, pound yen. Now, pound yen has been moving up quite nicely, but there's a couple of things here. Firstly, some of you might know wolf waves. It's actually setting up a very nice wolf wave. It's a little extended out of the range that we'd like to see it. But a lot of traders look for the market to go ahead and start moving back below this trend line right here. But what I have noticed here on this chart right here is that we have seen price extend to the 1.618 right here, and at the moment right now there's a lot of information here. This is the weekly. We have, let me just move out the information. We have now the market completing the 1.618. Now this move right here, we had a 1.27. I'm going to suspect that price is going to chase after this fourth wave low right here, possibly in target 140, 143. So I would say this is a monthly chart, but it's a sign of things to come. Therefore, traders should start paying attention down to the lower time frames and looking for some possibilities of what would keep the pound JPY from holding above support levels. And if there is nothing there, look for the break of supports and start looking to sell pound JPY to the downside. And a target of 143 is one of the targets to the downside.
We talked about this before with Gary, that stagflation environment, as you alluded to with the GDP numbers tomorrow, that's going to be so interesting. Of course, we're not quite at the point where you can say, oh, we're in stagflation, but keeping an eye on the factors could be really interesting.
Right. Yeah. And just looking at the charts overall, like on gold, oil, it's just a very clear bias right now. So all that, when I talk about GDP, it is speculation. So I don't know if things are going to change for sure, but we just saw that death cross too on gold. I know we were talking about it earlier in the week, but the 50 SMA crossed under the 200. So now we're getting that sell signal from the momentum indicator. So really just it's it's mostly speculation. I'm not too sure what will happen with GDP, but I'm pretty sure that if you see, I forget how many quarters it is, but if you see a couple quarters in a row of declining recession, there's a certain number of them, declining GDP, that counts as a recession to some definition. So I don't know. Hopefully we'll see some lower numbers just so we can look at more buys on the indices.
Don't forget to check out the links in the description if you want our broker recommendation, access to our free Discord, free EDGEFINDER, or want to chat with us on Telegram. Remember, you can watch us live in the markets every morning starting at 9:30 a.m. Eastern Time, and we have lots more free trading tools and content available on our website, a1trading.com. Thanks for watching.